Hi, it's Mitch here from Reverse Mortgage Pros, and in today's video, I'm going to walk you through the pros and cons of a reverse mortgage in Canada. Let's get started. Now, if you're new to my YouTube channel and you'd like to get more content, videos, or reverse mortgages, I'd love it if you'd hit the subscribe button on the page, hit the like button. That'll let me know that this was good content, that you enjoyed it, and it'll help me to decide and bring you more reverse mortgage content to help with your decision and help you decide if this is a good option for you. Now, in this video, a quick overview of what I'm going to go through. I'm going to go through the advantages and disadvantages of this important financial decision, whether or not a reverse mortgage is right for you. As a leading specialist in Canada, me and my team at Reverse Mortgage Pros believe that we objectively show you the information and help you to make an informed and educated opinion as to whether or not this is right for you. So we'll look at both the major pros and the cons of a reverse mortgage in Canada. Now, if you're new to the concept of reverse mortgage, I'll explain what it is in 20 seconds. I suggest that you look at my video channel on my website for more information. But reverse mortgage is a mortgage available to homeowners over 55. It doesn't require you to repay any money. There are no monthly payments. You can get up to 55% of the value of your home, usually around 15 to 55%, and that depends on your age, the property type, and the location, how much money you qualify for. You can take as much of that money as you qualify for, get as much as you want, but any existing mortgage you have in your home must be paid off first. So let me give you a quick example. If you've got a home worth $500,000, you might be able to get up to $250,000 or more as a reverse mortgage. But if you had an existing mortgage for $100,000 on your home, you'd have to pay that off first. So you could get $250,000, pay off the $100,000, and be left with $150,000. This is designed to help people stay in their home and help you supplement your retirement income later in life. Now let's look at the advantages of a reverse mortgage to start with. I know everybody wants me to start with the disadvantages, but I'm going to start with the pros and then move on to the cons. So the first advantage is that you own your home for life. There are no exceptions. That's end of story there. You can get money out of your home with zero risk that you'll ever lose ownership of it. You're guaranteed to keep your home for life. They cannot take your home away for any reason whatsoever. The lender cannot. And the reason for that is that there are no payments required for a reverse mortgage. One of the big reasons why homes are repossessed and people lose their homes is that they fail to make their mortgage and or home equity line of credit payments. So because there are no payments, there's no reason for the lender to ever come after your home. So it's actually less risk than the traditional model, traditional mortgage, sorry, where you could lose your home if you fail to make payments. The second major advantage is the freedom and flexibility a reverse mortgage provides. Now, property prices right now are high across Canada, and this lets you get some of the equity back out of your home. And you have complete freedom and flexibility as to how to spend that. You can spend it on anything you like. And because you don't have to make any payments, there are no rules, no requirements, no payments. It's the most flexible mortgage option available in Canada, essentially, for this reason. And you put a lot of money into maintaining and working on your home, paying the mortgage for years and years and years. This should be part of your retirement. Your home is an asset that you invested in, and a reverse mortgage is a way for you to get some money out of that asset that you built up over time. The third advantage is it's a 100% tax-free way of accessing retirement funds. Regardless of how you choose to receive it, if you want lump sum or monthly payments, it's tax-free since this is technically a mortgage. It's a loan, it's not income. And unlike pension withdrawals, other forms of retirement funds, not a single penny of this is going to be taxed. This is you taking equity out of your home. As I mentioned, the fourth big advantage is there are no payments required. The whole purpose is financial freedom, not loading you up with more debt so you need to worry about paying every single month. Now, what happens then to the interest on the mortgage is that instead of you paying it off every month, it just simply gets added to the balance owed. And I'll talk about this a little later in the video, but it is possible for you to actually maintain and even increase the equity in your home without having to make payments if your home grows faster than the mortgage balance does, which is the case in the majority of reverse mortgages in Canada. which brings me to the fifth advantage of a reverse mortgage, and that's safety for a housing market crash. If there's a massive housing crash, you can't owe more than your house is worth at sale. As guaranteed, a reverse mortgage is a non-recourse loan. That means that they can't come after any more than the value of that loan, or sorry, the value of your home. Now, 99% of reverse mortgages in Canada have equity remaining when the mortgage is paid off or removed. The other 1% can never owe more than what the house is worth. It can never be more than this. And it might even be higher than that now. It might be closer to 99.9% now. So you don't need to worry about leaving a bill behind for your family. There's no way that your family can inherit a bill that they can't pay. Now, let's move on to the disadvantages of reverse mortgage, and we'll discuss some of these other concepts I've talked about a little bit more in this video. So the first is the interest rate. So the amount that you receive is still liable to interest, and as I mentioned, even though you're not repaying anything, it's added to the balance owed instead of being paid every single month. Now, interest rates are higher than the best mortgage rates available and higher than home equity line of credit rates marginally, but they're lower than you'd pay for a second mortgage, a private mortgage, an unsecured line of credit, or basically any non-mortgage loan, credit cards, any kind of loans, anything else out there that isn't a mortgage. This rate is lower. So when it comes to mortgages, they're kind of in the middle. They're higher than the best mortgage rates. They're slightly higher than home equity line of credit, but they're lower than a second mortgage or private mortgage. So I put them right in the middle when it comes to interest rate. However, the rates are low enough that the growth in your home price should offset the interest, or as is the case for the majority of people in Canada, as I record this video, their homes going up in value by more than the interest. So they're actually still making money off of their home while holding a reverse mortgage on it that they don't have to pay. And that's assuming that they don't do anything with the reverse mortgage money, which is obviously one of the big benefits is you get to do what you like with it. The second disadvantage is that moving home is harder. A reverse mortgage is designed for people that want to live and retire in their homes. So if you're thinking about maybe moving to another residence, it's going to make it a little bit more difficult. You're going to need to close out the reverse mortgage first. And of course, it works the same as every mortgage or loan secured in your home in Canada. When you sell your home, you would pay off the mortgage with the proceeds. And as noted above, as I previously mentioned, you can never owe more than what your home is worth. Again, this is something that you'd have to do with a normal mortgage, home equity line of credit, but it is worth pointing out that this is a disadvantage of the product. It's designed to help you stay in your home, which means that moving your home is harder. The third disadvantage is you might not be eligible. Now, credit score and income are almost irrelevant for reverse mortgage, even though they're important for other mortgage products. Because there's no payment, they don't really care what your income and your credit score are, but there are some restrictions on eligibility. So every property owner listed on the title must be over 55, and if you're married, you must both be over 55. And then your age, location, and the property type will determine how much money you're eligible for. As I mentioned at the start, it'll be around 15 to 55%. In general, the closer to 55, so the younger you are, the less eligible you are, the older you are, the more eligible that you're eligible for. And then also the property and location will dictate that too. And then the third important criteria here is that the reverse mortgage is only available on your primary residence. You must be at least putting it on a primary residence, not any vacation or mobile homes, but you can blanket mortgage primary residence plus other homes. And there are starting to come out with other reverse mortgage products that you can look at for non-primary residence homes. The fourth disadvantage is that you're reducing your estate size for inheritance. Now, it's an important point to make that you're only reducing your estate size if you actually use all the money, and you're only reducing it by how much money you use. So if you take out a reverse mortgage for $500,000 and you unfortunately passed away the next day, your estate size would be barely reduced at all because that $500,000 would still be sitting in your bank account. Now, the actual impact on your estate size will then depend on how much money you use, and then it's also going to depend on how much your home grows versus the interest that's accumulating on the reverse mortgage. Like I said, 99% of Canadians have home equity left when the reverse mortgage is inherited by the estate. And right now, almost everybody, as I record this in Canada, reverse mortgage is seeing their home equity go up. So their home value is growing faster than the reverse mortgage interest. But I wouldn't rely on this happening, and I would factor in that there's going to be some kind of reduction in estate size to your decision. And ultimately, that's up to you and your family and your personal circumstances, how much you're willing to reduce your estate size by um, and leave your heirs and reduce your inheritance. So in summary, sometimes you'll have heard other rumors or facts about the disadvantages or advantages of a reverse mortgage in Canada. A lot of people confuse this product with the American version of the product, which is totally different. The above information represents the real, true pros and cons, things that you need to consider about a reverse mortgage in Canada. If you've got any questions about any of them, please feel free to leave them in the comment section below. Now, if you're thinking about taking out reverse mortgage, I'd love to give you a free reverse mortgage assessment in just 90 seconds, and I'll advise you if this is a good solution for you, if something better works, and if this is a good solution, what the best option, the best lenders, the best rates and product are for you. All this takes is just 90 seconds. Simply click the link below the video in the notes, or go to reversemortgagepros.ca/apply now. I'll also put the link below this video. And as I mentioned, if you've got any questions or comments, leave them in the comment section below, and I'll try to answer all of them. It might take me a little bit of time, but I'll try and get back to you if you've got any questions or comments. Otherwise, I hope you enjoyed this video. Please subscribe to my channel if you'd like to get more content on reverse mortgages and learn more about this option and how it works. Thanks.